Good afternoon, everyone, and welcome to our presentation today on the Export Market Development Grant. My name is Suleyman, and you may already know me in my role as a tax advisory partner, advising on various corporate taxation matters, including tax consolidation, the R&D tax incentive, employment taxes, which have been very much in the news lately with superannuation. And today, again, we'll be talking about something very relevant, the Export Market Development Grant. I'll be joined today by two of our experienced practitioners in the corporate taxation space, also specialising in R&D and the Export Market Development Grant. And I'll refer to the Export Market Development Grant as Emdg from this point forward, so it's not so wordy. Maria Paradisis, who's a client director in our corporate taxation team, and Janet Aucamp, a manager in our team. Given all of our collective corporate tax experience, what we pride ourselves in when we're providing advice to our clients is the fact that we can provide advice on a specific area, such as the Emdg or such as the R&D tax incentive, but we'll always have the broader context of your business in mind. So that's why really happy to bring that to you today, and really confident that myself, Maria, and Janet are able to tailor things in accordance to your business. Now today we'll be talking about the Emdg, and you might be wondering, well, why bother talking about this, particularly in the current environment that we're dealing with, where COVID restrictions run rife. There's travel restrictions everywhere, and we're unable to travel abroad and do business abroad as we usually do. Well, the fact of the matter is, what we'll be talking about today is the 2020 Emdg claim, and for much of 2020. The world was a place that we called normal. People were still traveling overseas. International trade was open, and it was only in the early stages of this year in Australia, probably didn't ramp up till February, March, where shutdowns occurred. So there's still considerable expenditure that would prima facie qualify for the Export Market Development Grant. And given how times are tough for many businesses, the Export Market Development Grant, it represents another opportunity to obtain funding from the government. It's funding in a scenario where there's probably already been expenditure. So every government grant becomes vital and important for businesses right now. So just a little bit of housekeeping. We will endeavour, we're happy to take some questions. The format of live presentations are a little bit different. There should be a drop-down box or a dialogue box where you can populate any questions you have. And time permitting, at the end of the presentation, we'll be happy to address some of those questions that you have. If we do run out of time, or if we don't address those questions, we will endeavour to follow up post the presentation. So what we'll be covering today, I'll give a brief overview of the grant before moving over to Maria, who will talk about some of the eligibility requirements and what are eligible and ineligible expenses. Then we'll move over to Janet, and Janet will talk about the application process and timeline, and we'll just do a short little case study to consolidate what we talk about today. And then I'll provide some concluding comments and questions at the end. So if we move over to the next slide, what is the Emdg? What is the Export Market Development Grant? Now again, it's one of the Australian government financial assistance programs, and it's administered by Austrade, and it supports a wide range of industries that are looking to export their Australian product, their goods or their services into an overseas market. Now the Emdg scheme, as you can see there, it is for small and medium enterprises to develop the export markets, and Maria will talk about what those thresholds for small and medium enterprises are. And what we're talking about is a reimbursement of up to 50% of eligible export promotion expenses above a $5,000 minimum spend, above a $15,000 minimum spend, and the government will reimburse up to 50% of that spend, excluding the first $5,000. And what the case study that we'll provide later on will flesh out a little bit about how that calculation occurs, but just a really simple example, if you spend $40,000 on eligible export promotional expenditure, the way the scheme works is it says, well, let's take that $40,000, you're over the $15,000 minimum spend, let's take away the $5,000 that you won't be reimbursed by the government, so 40,000 less 5 is 35,000. the government will give you up to 50% of that as support for the Emdg. So that's a $17,500 government grant for costs that may have already been incurred. Now, you're eligible, once you're into the Emdg scheme, you're eligible to receive up to 8 annual grants. The first 2 years, the grant process is relatively simpler to apply and qualify for. And in the third year, there's an extra criteria that becomes a requirement, and businesses need to satisfy an export performance requirement. Now, we've mentioned the word COVID a few times already, and look, as part of the COVID-19 assistance measures, the government has committed more funds towards Emdg. So $49.8 million of funding was committed to Emdg recently because of COVID, or support for businesses suffering from COVID. The budget had already allocated an extra $60 million. So in total, there's $207 million of funding available for claimants in the Emdg. Now, if we extrapolate from prior year figures, I said before you get up to 50% of your grant. The Emdg, it was a little bit of a demand-based constraint on how much of a grant you might receive, because if the government had only made available $50 million and there was an oversupply of claimants, you didn't quite get to 50%. It was pro rata allocated amongst businesses. So I know in the prior year, 2019, it wasn't 100% recruitment of the Emdg, but with all of the extra budget funding and the COVID funding, if we extrapolate last year's figures, it's expected that claimants will get their full 50% entitlement in the 2020 year. So some of the other COVID-related changes for the 2020 year, I mentioned before, in the first 2 years, it's relatively simpler to qualify for the Emdg. In your third year, you need to meet an export performance requirement. Now, given COVID has meant that export performance will really have been suffered and marketing efforts would really have been hindered, for 2020, there's no longer a requirement to meet the export performance requirement. So businesses, even if they're in the third or fourth or fifth year of claiming, don't need to meet that requirement. Obviously, acknowledging the impact that COVID-19 has had on businesses. The other COVID-related concession that's been made with Emdg is that the 2020 grant scheme will allow you to include costs where events have been cancelled and trips haven't occurred, again, obviously because of the travel restrictions and so forth and the international shutdowns. So long as that kind of expenditure hasn't been refunded, so if you'd paid to go to an overseas conference and that conference isn't running, so long as that conference hasn't been refunded, the Emdg, the eligible expenditure, will include those costs, notwithstanding the fact that there hasn't been any promotional activity that has been able to occur. So what is the benefit? I think we've really touched on it with a little bit of our introductory comments. I did say before that you must have at least $15,000 of expenditure in order to lodge an application. If you are a first-time applicant, it's really, really handy to note that the way you frame your 2020 claim, for example, if that's going to be your very first year of claiming, you can not only include eligible expenditure on trying to promote an export market for your product or service or good for 2020, you can also look to your 2019. So there's 2 years worth of expenditure that can qualify as eligible expenditure to work out how much of the grant that you qualify for. And we can see there that there are 2 tranches of payments, an initial and a second tranche of payment. The way the system is administered, the payments are administered, it's under a split payment system. So for 2020, again, it's another handy COVID measure. To the extent that you work out your Emdg grant and it's $100,000 or less, you'll receive all of your payment in tranche 1 as your initial and final payment. The initial payment you generally receive a few weeks after you submit your claim. So if you submit your claim in, say, October, obviously there's some toing and froing with Austrade. They'll have to process your form. If there are any outstanding questions, they might come back with their queries, but to that extent, you submit your form in October, it might be a few weeks of processing time. You should expect your payment in tranche 1 to come in November or December of this year. So to the extent that your total claim of Emdg, the grant, is less than 100,000, you can expect all of that payment to occur in tranche 1 as a first and final payment. That's, as I said before, that's a useful feature. It's up from $40,000 in the prior year, pre-COVID. And then the second tranche payment, normally that arrives at 30 June or shortly after the end of the year. So for the 2020 claim, you'd expect that to be paid in the first week of July, just after 30 June 2021. And it's what's left in terms of your total claim. So if we took the example that your overseas expenditure was $290,000, the way the formula works, we take away the $5,000, that's $285,000 of eligible expenditure, multiply that by 50%, that's $142.5. Tranche one, you could receive your $100,000, there'd be $42,500 remaining. You would normally expect that around June, July of 2021. As I said before, and not to confuse things, but as I said before, if the EMDG was overrun with claimants and demand far outstripped the supply of funds, then you might not receive your full $42,500 entitlement. It might be scaled back. But as I said before, given all the extra additional budget funding, if we extrapolate out the claims from the prior year to 2020, we would expect that all claimants would receive a full reimbursement. So look, without further ado, I might hand over to Maria to talk about some of the eligibility requirements for Australian businesses.
Thank you, Ali. Good afternoon, everyone. As Ali mentioned, during my presentation, I will be discussing the EMDG eligibility requirements, and specifically I will be addressing what type of entities are able to claim the EMDG and what amounts these entities are entitled to put forward as part of their claim. So who can make an EMDG claim? Broadly, any Australian businesses, irrespective of their legal structure, is able to participate in the scheme, meaning the scheme applies to individuals, companies, trusts, cooperatives, associations, partnerships, essentially anyone that is operating a business here in Australia. Secondly, and as Ali mentioned, the scheme is targeting the SME market, which means that the entity must be generating income of not more than $50 million on an annual basis. And again, obviously, sorry, I'm repeating some of Ali's opening comments, but the entity must have spent a minimum of $15,000 in eligible expenditure before they are able to make a claim. There is a concession available to first-time applicants that enables them to accumulate 2 years' worth of expenditure in order to meet this $15,000 minimum. In addition, the entity must be able to satisfy the principal status requirements. Put simply, this means that the entity must be the seller or the intended seller, own the product, or is contractually responsible to deliver the product. So basically, you need to be delivering the product or service that you are looking to export overseas. And of course, the entity must be incurring this expenditure to promote and market one of the following overseas: Australian goods, so essentially any goods that are made here in Australia, goods that are not made in Australia, however, there is a significant benefit that will be received by Australia as a result of the product or service that is being exported, Australian services, other than services relating to the following: Australian law, Australian assets, for instance, real estate, immigration and films, services or IP arising from Australian activities, trademarks that have been first utilised here in Australia, know-how resulting from Australian work, Australian events and conferences, and Australian tourism. So what this means is if an entity has eligible expenditure that has been incurred to promote and market one of the following that I just mentioned, they are likely to be able to enter into the EMG scheme. If you are a first-time applicant, you will, as well as part of the application process, be expected to submit your financial statements and some additional background information regarding the business and the products and/or services you're exporting. Now that we have discussed who can qualify for the EMDG, we will now move on to discuss the type of expenditure that you can qualify for the EMDG. And it is important to keep in mind here is that you need a minimum of $15,000 per year before an entity can make a claim. So the beauty of the EMDG scheme is that essentially you've already incurred the expenditure. So what you would need to do is you would tick off the eligibility requirements I've just spoken about, And then you'd review your profit and loss statement and determine whether you've incurred any of these expenses that I'm about to discuss. And it is important to highlight here that the expenditure must have been spent by an Australian business who is seeking out, creating or increasing the demand for their product or service in an export market. And you obviously must be going overseas. The amount must have been paid by the Australian business and not a related party or an associate of theirs. The amount must have been paid in the relevant grant year, and the entity must be able to provide evidence of the expense in the form of an invoice and a bank statement. As Ali discussed, the government has announced some COVID measures to assist applicants with applying for the Emdg scheme. Basically, Austrade will treat any marketing and promotional activities that were cancelled as a result of COVID-19 as having taken place for the purpose of determining an entity's Emdg eligibility. However, this concession will not apply to those expenses that have been reimbursed. So if the applicant has been reimbursed an amount as a result of the cancellation, the entity is not able to claim this expense unless, of course, the reimbursement did not cover the full cost of the expense incurred. And if a credit note has been issued instead of a refund, the applicant must be able to demonstrate how they are intending on utilising this credit note for an approved promotional purpose. So we have grouped, for the purpose of this presentation, we've grouped the types of expenses into 3 categories. So we've got the overseas marketing and intellectual property, or IP. There are 9 subcategories in total, which I will now discuss further and give you examples for each of these categories. The first category I'm discussing is overseas. So there's 2 subcategories here, the first one being overseas representation. This category captures amounts paid by an Australian business to an overseas representative who acts on their behalf to market and promote their product and or service. Now, expenses in this category cannot relate to after sales or development. So it wouldn't pick up any discounts or commissions or any amounts incurred to develop a product and or service. The maximum amount that can be captured in this category is $200,000 per application. And the types of expenses that would qualify in this category would be amounts paid to the overseas representative, for instance, their salary, the rent for the representative's office, airfares if the representative is traveling to represent your business, and any other transportation costs the representative would be likely to incur. The second category is overseas buyers. Now, note this category looks to capture costs that an Australian business incurs to fly someone from overseas here into Australia. Granted, that's going to be a little bit difficult now with COVID-19, but if you are flying someone from overseas to view your product and or service, and this individual has the ability to influence the purchase or potential purchase of your product, then expenses incurred to bring this person over to Australia will potentially qualify. This individual must not be an Australian resident, and obviously it has to be as a result of trying to promote the exportation of your product. Now, the caps for this category are $7,500 per buyer with a maximum amount of $45,000 per application. Now, the types of expenses that would qualify would be airfares and obviously any other transport expenses incurred whilst the overseas buyer is here in Australia, and reasonable expenses for accommodation and meals. Now, there is a restriction here though with airfares. If you are putting the overseas buyer, sorry, I think we're having some issues with my presentation. If you are paying for first class tickets, then you can only capture 65% of the cost towards the claim. And obviously you can't pick up any entertainment expenditure as well. It's purely just costs incurred to bring the person over. The next subtype are marketing costs. The first one being marketing consultants. Now, this category captures costs incurred to employ an independent person who is engaged to perform export, marketing, research, or promotion activities. The maximum amount that can be captured in this subtype is $50,000 per application year. The types of expenses that would qualify would include the consultant's costs, any amounts that the consultant has incurred on behalf of your business that has a purpose of promoting your business. So any advertising costs, any costs the consultant has incurred in conducting research in the market, any travel costs that they've incurred, any costs essentially incurred by the consultant to promote your business. I'm sorry, I'm not sure what is happening with my computer. Maybe that will fix it. Apologies for that. I'm not very IT savvy. The next category is marketing visits. Essentially, this subtype covers any costs.
Maria, I was just going to say, if we've got problems with the slides, we will forward the slides after the presentation for the people attending the presentation.
Apologies for that.
No problem.
So the marketing visits. So essentially, it's any costs that have been incurred for you to travel overseas to market your product and to increase any export sales that your business could receive. Now, this has got some caps as well. Essentially, it captures the cost of the travel. And again, we've got the first class restriction here where only 65% of the cost can be captured. But there's also a $350 allowance per day up to a maximum of 21 days. And this allowance covers amounts for accommodation, entertainment, and meals. So put simply, all you can claim is $350 per day. If your accommodation and food exceeds the $350, well, then that excess amount does not form part of this claim. Now, again, we've got the COVID exemption here. If you've incurred expenses and the event has been cancelled, then you can claim the expense provided it hasn't been reimbursed. So the COVID concession will apply. You can also add costs incurred to develop samples and producing samples and providing these samples to an overseas entity or buyer. So essentially, if you manufacture these samples and you incur these costs to have them delivered overseas, these costs can also form part of the claim. The maximum amount that you can claim towards this subtype is $15,000 per year. The next category are trade fairs and promotional events, which covers costs that have been incurred in directly participating in an international trade fair, seminar, forum, or private exhibition. And essentially, it covers registration and entry fees, costs incurred to secure a booth, and any freight incurred to get your product to the trade show. The final marketing cost category is costs that have been incurred to produce and provide advertising or promotional material, which would include brochures, flyers, TV advertisements, internet promotions, or even if you're producing small value gifts with your logo on it, or even you're sponsoring an event overseas and you get your logo displayed. So they're the types of promotional events promotional activities, and it covers costs that you would have spent to design the material, translate the material potentially in another language, print them and organize for the layout. So it's anything that you've spent to develop this material. The final subcategory is intellectual property. Now, intellectual property would include patents, designs, trademarks, copyrights, and trade secrets. And essentially, this category will pick up any costs that you've paid to a third party, so lawyers or attorneys, to register your IP or extend the rights under foreign law of your IP. Now, the key requirement here is that the IP must have been firstly utilized in Australia, or it's increased in value because of its use in Australia. And you typically see that with R&D activities. So you may have an Australian entity that has potentially licensed some IP from an overseas entity, a related entity, and because of the Australian activities and the research and development, they've able to add value to this IP. So because they've extended the value to it, then that would qualify, even though the initial IP may not necessarily have belonged to the Australian entity. Now, this category is capped to $50,000 per year. The final type of expense would be insuring your IP. So obviously the insurance premium paid to secure your insurance overseas would qualify for this expense. So obviously not everything is eligible. The objective of this scheme is to assist applicants with their exporting endeavours, and not necessarily to produce a product, distribute a product, or source and finance a product. So if you keep that front of mind, it's the whole purpose is to facilitate your export and marketing endeavours. So you just need to keep that in mind. So expenses they may not qualify would be expenses with New Zealand and North Korea. They are not eligible. Amounts that are capital in nature, which covers amounts incurred to buy a capital asset, maintain this capital asset, and even the annual amortization of this capital asset as well. So after sales costs don't qualify. So for instance, commissions and/or discounts. Expenses that fund illegal or unlawful activity, so bribes, cash payments exceeding $10,000, expenses that have been reimbursed by a third party, or an alternative grant. So one that would be seen regularly would be the R&D tax incentive. So if you have received the R&D tax incentive on your expense, then that expense is not going to qualify for the Emdg because that will be a double benefit. And then the final amounts that wouldn't qualify would be payments of an Australian tax levy or charge, or amounts that have been paid by a related business entity or an associate of yours. Now, Ali touched on this point briefly, and essentially the first 2 years of an entity's eligibility is equal to 50% of their eligible expenditure. However, from year 3 onwards, it gets a little bit more complicated. And given the recent COVID-19 implications, the government has temporarily removed these additional hurdles from 1 July 2020. However, I think it's worthwhile mentioning them, and just so you know that it does get a little bit complex from year 3 onwards. So essentially what happens, the applicant from year 3 onwards can choose one of 2 options to have their eligibility assessed. And once an option has been chosen, they are not able to switch to an alternative option. So the 2 options that are available are the export performance tests and the Australian net benefit requirements. I'll discuss option 1 now. The export performance test. An entity's eligibility under this option is determined to be the lesser of 50% of their total expenditure and the relevant percentage of export earnings, depending on how many grants the applicant has received to date. So the percentage decreases from year 3 onwards. So the percentage starts at 40% for year 3, 20% for year 4, 10% for year 5, 7.5% for year 6, and finishes at 5% for year 7 and 8. Now, this option is best described with an example, so I can actually articulate what it actually means. So in our example, we have an Australian business. They have not yet received the maximum amount in grants of $150,000, so they are eligible. The applicant is in year 7 of claiming under the Emdg. During this particular year, they have incurred $200,000 in eligible expenditure. So their provisional entitlement is therefore $97,500, which is calculated as $200,000 minus the $5,000 minimum multiplied by 50%. During this particular year, they had export earnings of $400,000. So the applicable percentage of export earnings is 5%. So to calculate their entitlement under this second formula, you apply the 5% against the export earnings of $400,000, and the entitlement is determined to be $20,000. So under this test, it's the lesser of the 50% or the export earnings amount. So here we would compare the 97,500 to the 20,000, and obviously in this instance they would be entitled to a $20,000 grant. However, again, given the COVID concessions, for this year, the applicant will be entitled to receive the $97,500. Option 2 is a little bit more onerous and requires the applicant to put forward a substantial amount of documentation that can prove that their product or service will have a commercial return or is likely to receive a commercial return. They are likely to achieve sustainable international business success as a result of their product or service. And as a result of their product and service, Australia will receive an economic benefit, for instance, additional employment opportunities. Once this information is put forward, Austrade considers what's been put forward and makes a ruling. Now, depending on what the ruling is, will dictate whether the applicant is entitled to a grant. If Austrade says no, you don't have an Australian net benefit, then the applicant is not going to receive anything. But if Austrade says yes, then the applicant will receive 50% of their eligible expenditure, less $5,000. So obviously, given the current COVID-19 concessions, there would be no point in pursuing option 2, because under either option currently, the applicant will be able to receive 50% less than $5,000 of their eligible expenditure. So there's really no point in pursuing option 2 given the COVID concessions. So now I will pass on to Janet, who will discuss the application process and timeline. Thank you.
Thanks, Maria. Hi, everybody. We are now going to discuss the Emdg process once the entity has determined grant eligibility. As Ali has discussed earlier, Emdg will change from next year to an upfront funding system. I will only be discussing the application process and payment times for the current year. Emdg applications for the year ended 30 June 2020 should be submitted by 30 November to Austrade. Austrade does not accept any late applications. Applications are processed faster if submitted by 15 October, as the majority of applications are generally submitted in November. The applications that are submitted should be fully completed. Documents to support the amount and the purpose of the expenditure should be submitted with the application. Austrade will review the submission to ensure all required information has been provided. Austrade will assign an assessor who will contact the applicant or advisor when they start assessing the claim. In assessing the claim, Austrade will review the application, the supporting documentation, as well as any publicly available information. The assessment may include a telephone interview or a visit to the applicant's premises. Site visits are almost always conducted for first-time applicants. Austrade may request additional information which should generally be provided within 5 days. Austrade may grant additional time if they request complex information. First tranche payments will be made after Austrade has processed the application and conducted the site visit. Ali has discussed this already in quite some detail. Second tranche payments will be made at the end of the financial year. We are now going to look at a basic example to put together everything we have discussed. We have a company that has been incorporated in Australia and is developing, improving, and manufacturing various types of health food products. Health Food's annual turnover for its latest financial year was $49 million. The company currently sells its products to the Australian and the US markets. It started accessing the UK and the New Zealand markets during 2020. Trade fairs have been attended overseas, advertising campaigns were undertaken, and free product samples were given away. The company has incurred $50,000 during 2020 to access the UK market and $30,000 to access the New Zealand market. 15,000 of the 50,000 UK payments were made in cash. The company is eligible to apply for EMDG due to it being an Australian company and its income being less than $50 million. None of the expenditure incurred in relation to the US market is eligible for EMDG as the US market has already been established. None of the $30,000 expenditure incurred in relation to New Zealand is eligible for the grant due to the expenditure incurred to access the New Zealand and North Korean markets being specifically excluded from EMDG. The expenditure incurred for the trade fairs, overseas travel to attend the trade fairs, advertising campaigns, any promotional materials for these campaigns, and the giving away of the free samples relating to the UK are eligible for EMDG, provided these expenses are reasonable and commercial. However, EMDG only allows for a maximum of $10,000 of cash payments to be included for grant purposes. As the company has made $15,000 of cash payments, $5,000 thereof will not be eligible for the grant. Also, only a maximum of $15,000 can be claimed for the free samples category. For purposes of this example, let's assume the free samples did not exceed the cap. Due to the eligible EMDG expenditure being above $15,000 for the export of goods, and the entity has not reached its limit of 8 grants, the entity is eligible to submit an EMDG application in relation to accessing the UK market only. As discussed by Ali, the benefit is calculated as 50% of the eligible expenditure above $5,000. As explained, the company's eligible expenditure has been calculated as $45,000, which is the 50,000 UK expenses incurred, less the 5,000 excess cash payments. With reference to the benefit formula, we first need to exclude another 5,000 from the 45,000 eligible expenditure. 50% of this 40,000 will be the EMDG benefit. The company will therefore receive $20,000 for EMDG in relation to its 2020 year. In order to receive this grant, the company should submit an online application with Austrade prior to 30 November, ideally before 15 October to ensure faster processing of its application. Documentation supporting the expenditure should be submitted with the application. These documents may include invoices, record of payments, airline tickets, trip reports, or evidence of how the cost of the free samples was calculated. Post-submission, Austrade will check the application for completeness and assign an assessor to the application. Austrade might request additional information and may conduct a site visit or have a telephone call with the applicant. Due to the EMDG amount for this company being below the initial ceiling amount of $100,000, the full $20,000 will be received as a first payment. Once Austrade has finalized the processing and assessment of the application and conducted the site visit, the payment of $20,000 will be made to the entity. I will hand back to Ali now.
Thanks, Janet. That was great. Look, how can we help? I suppose where we can assist businesses in making a claim for the EMDG, we have a lot of flexibility to scale our support services and our offerings. We can determine whether or not the key EMDG eligibility requirements are satisfied. Again, we can help identify eligible expenditure. And I know there's been one or two queries received regarding what might be eligible expenditure. We can help manage any or identify any risk involved in the claim, and maintain contact with Austrade in order to help with the claims process. Our involvement can be as simple as reviewing an application and just doing a final sense check and supporting in that way, or it can be a complete end-to-end process where we review your expenditure and have quite a few teleconferences, discussions, and understanding as to what expenditure in your trial balance represents in order to actually finalise and lodge an application on your behalf with Austrade. So we have the flexibility to scale up or down our offering as the case may be. Look, with that, I'd like to thank everyone for their time this afternoon. I hope you found the presentation useful. This is my third presentation this year, and each time I've presented in a different format. There's been a pre-recorded, there's been audio only with slides, and this is the first one with video, and I must admit it's a strange feeling. One of the things I was most nervous about before the presentation was whether I could still fit into my work shirts following COVID, and I'm glad to advise that I can. But yeah, thank you very much for your patience and time this afternoon. Look, because we're having a few technical glitches, I know there are a few questions. I think we've almost come to time in any case, but I think we'll need to take those questions on board and respond to the applicants. As I say, I haven't been able to view them. I know they have been generated. So thank you for your time. I hope you found it useful. I hope you bear in mind that it is an additional source of funding for your businesses in this time of need, and yeah, we'll be in touch shortly with the slides and responses to any questions that we have received. And look, feel free to reach out to us directly on our emails. Again, I think contact details have been provided with the seminar presentation. If you have any further questions that you haven't had a chance to put through in the presentation, send them through directly via email, and we'll endeavour to respond in a short period of time. Thanks, everyone.